Welcome to the Explainer. Today, we're pulling back the curtain on a crypto trader's absolute worst nightmare. We're talking about the hidden mechanical architecture of market manipulation. Let's just dive right in, because honestly, what you're about to see is going to permanently change how you look at a price chart. Picture this for a second. You're sitting in a dimly lit room, right? You've got multiple screens glowing with crypto charts. The lines are just zigzagging up and down, and it feels like pure, unadulterated chaos. It feels like millions of people out there are independently buying and selling. But let me ask you a pretty dark question. What if it isn't chaotic at all? What if it's entirely controlled? What if literally every pattern you trade is actually a meticulously designed trap? Section 1. The perfect breakout illusion. To really understand this trap, we gotta look at the bait. You see it right there on the chart, a perfect textbook breakout. Huge, strong green candles completely smashing through resistance. Trading volume is massively spiking. Your Twitter feed is going absolutely crazy. It looks exactly like the setup you've been taught to look for, right? So obviously, you buy in. And for a brief, totally intoxicating moment, you're winning. You caught the absolute bottom. You're riding the wave, and that confidence is just building in your chest. You're thinking, this is it. But man, that excitement, that is exactly what the unseen architects of this market are sitting there waiting for. Part 2, the trap is sprung. Right at the absolute peak of your confidence, the whole environment just instantly changes. The momentum hits this invisible brick wall. Without any warning whatsoever, those beautiful green candles vanish, and they're immediately replaced by aggressive, incredibly heavy red candles. And it happens fast, way faster than a normal correction. We're talking about a violent, sudden reversal, and you're just left sitting there staring at your screen in absolute panic. It's just too fast. The exact same momentum that pulled you in is now ruthlessly pushing you out. But here's the kicker. This isn't random selling. It's highly targeted, and it has a very, very specific destination in mind. Part 3, hunting the stop loss. That destination, it's your safety net. They are executing what's called a stop-loss hunt. The price violently spikes down in a fraction of a second, hitting the exact precise levels where everyday retail traders like us place our stop-loss orders. It literally forces you to sell at a loss. And then what happens? The price immediately recovers. It zips right back up. It's almost as if the market knew exactly where your safety net was hiding. Part 4, the liquidation cascade. Because you see, it's never just about your individual stop-loss. If we zoom out, you see this catastrophic chain reaction happening. Late leverage traders enter the breakout trying to catch the momentum. Then, boom, the trap springs, and the price crashes. This triggers forced liquidations, meaning exchanges are forcefully closing those over-leveraged positions. And guess what? Those closures automatically become market sell orders, which drives the price down even further, which of course triggers even more liquidations. It is fast, it's brutal, and once it starts, it is totally unstoppable. So where does that leave you? You're just sitting there watching all these red flashes on your screen. You're confused, you hesitate, you start chasing the price down, desperately trying to recover your capital. But every single move you make just feels wrong. Why is that? Because you are reacting. You're not understanding. You're playing a game without realizing someone else entirely wrote the rules. Part 5, enter the whales. All right, it's time to fully pull back the curtain here. These aren't just organic, natural market behaviors. These are the massive footprints of whales. On one side of this battlefield, you have the retail traders, reacting to the screen, getting emotional, constantly chasing candles. But on the other side, you've got smart money, the whales. They are cold and calculating. They don't chase the price, they move the price. They purposely create that fake upward move just to attract your liquidity, and then they use it to take the total opposite side of the trade. Part 6, the architect's truth. Which brings us to a really paradigm-shifting truth. The market isn't designed to reward the majority. It is fundamentally designed to exploit them. The fake breakouts, the stop-loss hunting, those brutal liquidation cascades. It is all meticulously engineered to transfer wealth from the reacting, emotional majority directly to the calculating minority. So the next time you see that absolutely perfect breakout forming, ask yourself, are you actually finding an opportunity, or are you just becoming the liquidity for someone else's trap?